everyone, welcome back to my YouTube channel. Today we will discuss the options you have when it comes to health insurance coverage if you're running your own business and are self-employed. This could get confusing for some, and today I will try to explain what health insurance plans are available if you're self-employed and whether or not you can tax deduct the money you pay for your own health insurance. Even if you are employed full-time and have a side business, you may qualify for the tax write-off. So if that's the case, please make sure to watch this video until the end, as I always give tons of free advice and tips without asking anything in return. Oh, well, maybe I'll ask you to like my video. I want to mention one thing before we begin. I'm a licensed and independent insurance agent in California. All the details I'll be giving you in this video is for informational reason only. Please do not consider this as legal, financial, or tax advice. In fact, I highly recommend that you speak with a professional before you make any financial and legal decisions. Do not confuse the health insurance for self-employed with the health coverage tax credit, which is a refundable tax credit that helps you pay for health insurance premiums if you qualify. The credit is equal to 72.5% of the premiums that you paid in full for qualified health insurance plans of each year. Also, do not confuse the health insurance for self-employed individuals with the corporate health insurance. The requirements are absolutely different. In order to qualify for the corporate health insurance, your company needs to be a corporation and have at least 2 full-time employees on payroll. We will not talk about the corporate health insurance in this video, but I have to mention that these two are different things. So if that's the case, let's determine first who is considered self-employed. The IRS says that someone is self-employed if they meet one of these conditions. First, someone who carries on a trade or business as a sole proprietor or an independent contractor, a member of a partnership that carries on a trade or business, or someone who is otherwise in business for themselves, including part-time businesses. This definition would also include members or owners of a limited liability company, LLC, because they are usually taxed as sole proprietors, single member LLCs, or partners in a partnership for the multiple member LLCs. Owners of an S corporations are not considered self-employed in the same way that partners in a partnership are. The idea is that the owner of the S corp usually receives a salary, as I mentioned earlier. So the owner of an S corp can qualify for small business health insurance plan if they have at least 1 more employee working full-time on payroll. So now that we determined who is qualified as self-employed business owner, let's see how you can qualify for the health insurance tax write-off. According to IRS, if you're self-employed, you are allowed to deduct 100% of your health insurance premiums, including dental and long-term care coverage for yourself, your spouse, and your dependents. It's important to understand, however, that this is not a business deduction. It is a special personal deduction for the self-employed. This deduction applies only to your federal, state, and local income taxes, not your self-employment taxes. In order to qualify for this deduction, you must meet 2 requirements. First, you need to have business income. You may deduct only as much as you earn from your business. If your business earns no money or has a loss, you get no deduction. If you have multiple businesses, you cannot combine the income for this purpose. The second requirement is that you have no other health insurance coverage. You may not take the self-employment health insurance deduction if you are eligible to participate in a health insurance plan maintained by your employer or your spouse's employer. Because the self-employed health insurance deduction is a personal deduction, you take this deduction directly on your Form 1040. It does not go on your Schedule C if you're a sole proprietor. In addition, this deduction reduces your adjusted gross income dollar by dollar, so it could be a pretty good deduction for a self-employed individual. If you're self-employed, you can simply enroll in an individual health insurance plan, and premiums you pay for that insurance will be deducted when you file taxes, if you qualify. In addition, you can also qualify for health insurance subsidies offered via exchange, so make sure to check the income limits and take advantage if you qualify. I have the income limits table for California on my website, so please check it out and see if you qualify. You can also look into HSA, health savings accounts. These have double benefits in certain cases. The special tax sheltered savings account allow you to accumulate funds for medical bills that you can use anytime. To be eligible for an HSA, you must be covered by a high deductible medical insurance plan, and if you qualify, you can deduct the premiums you pay for this high deductible insurance plans. I have separate videos, so check it out on the HSAs. I have to mention that if you are a gig app-based driver, you can qualify for a health insurance stipend. And since the stipend will be provided by the company you work for, you can't really deduct this money, because that's money you are basically getting for free. I have separate videos on the app-based driver as well, so check it out. This will benefit you. The bottom line is that even though health insurance is expensive, there are ways to get the costs down, so there's no reason to risk and be without health coverage. Thank you for watching. If you found this video useful, you know what to do. Like, share, comment, and subscribe. Thank you.